Alright, so there's couple of parts here. The first part of what I'm going to do today is more practical. So once is the okay, I'm back. This has to do with the practical application of taking a position. Alright, so the first part of this is this recording has to do with over here where he says in taking a position. He talks about three opportunities to buy. So let's make it really simple and make it one opportunity to buy. Alright, so the three opportunities, one was you have all of this climax. Let's say you have a climax, right? And this is a higher time frame. Actually, I'll go over all three, but then I'll focus on one. So this is a higher time frame, and this is climax. So this was the first opportunity to buy, was when on the climax, which is really a severely oversold position, on the higher time frame climax oversold position, right? What he did was he went to the lower time frame and he bought strength. Okay? So the first place to buy that Wyckoff describes is when a higher time frame, and in his example is a daily, is in a climax, and then it's oversold because it's in a climax. It's a climax, wide range, widespread, wide volume, and he's trying to play the automatic rally or the technical rally. But it's not really a technical rally. What he's trying to do right here on the lower time frame is that if very vigorous strength came in, very strong strength on a lower time frame comes in from an oversold position, what happens on a lower time frame is you actually get an uptrend. So for example, this piece right here, that whole piece is going to look like this. And then what happened was you had a very strong bar, right? Volume off the bottom. So it's going to look like that. So this piece on a higher time frame is climactic, and it's going to look kind of like this on a lower time frame, and then you have a lot of strength in the form of a sign of strength and so on and so forth. So he's ready to counter trend and buy the climax and oversold position and basically get in. But remember, even though it looks like it's a climax on a higher time frame, on a lower time frame, that strength, that volume off the bottom, that pressure on a lower time frame will change the trend to an uptrend on a lower time frame. Okay, let's just go to that chart. This section 4M. Find it. Jeez. So this bar right here, right there, that bar, that heavy volume, this is a higher time frame daily chart, and that was the first position to buy because a lot of volume came in from the lows. So what this will look on a lower time frame like is basically you have your rally reaction, blah blah blah, keeps going down, then you have massive strength coming off the lows, and if you can get in around the lows after the volume comes in and after the trend turns up on a lower time frame, he'll take it. So this is what tape readers do all the time, by the way. Alright, so that's the first place to buy. Alright, remember, you're not buying the down into the downtrend, you're buying the reversal on a lower time frame. So there will be for sure, if you have heavy volume coming in and price moving, there will be a sign of strength on a lower time frame. That lower time frame sign of strength and holding higher supports, etc., will turn the lower time frame trend up. So even though it's in a climactic position on a higher time frame, and in this case the daily, on a lower time frame, as that volume and price comes in from volume off the bottom, you will have indications of strength, and that lower time frame trend will turn up and you can get in. So that's the first long But now let's take a look at uh, the second position. This second position is what you should focus on a lot. The second position is right here, is in the springboard position. Alright, now watching this daily chart, the second position, he says what? You have a rally, right? You have a rally, strong rally, and you have a pullback. Okay, you have some sideways movement that shows clustering of closes in these three bars right here, last three bars. So basically you have a couple of indications. One, in this rally you have bang, and you have good volume. On the pullback you have, so you generally, the rally reaction volume pattern, I don't like using that pattern word, but will look like a house top, you know, like this. Go volume up, then volume down on the volume histogram. Okay, so you can see that here you have good volume up, and then the volume goes down. So if you would draw a line or arrow, it should be going down like this, and the rally volume should be going up. And what you're looking for, okay, so one is the low volume pullback, the volume diminishing on the pullback. Second is the clustered closes. The clustered closes here, where the closes make no progress or very little progress. Alright, so it shows that the progress is not being made, and since the closes are not making progress, it will basically start looking like it's going sideways. If they were making progress, it would look like it's continuing to go down. If they're not making progress on the pullback, it will start looking like it's going sideways. So that is the indication of clustered closes, where on the pullback the price starts going sideways. Okay, so the first thing is, on the rally, the volume should be diminishing. It should have this pattern, overall pattern. Do not look at every single bar. You're going to confuse yourself. You want to see the general pullback pattern. The volume should be like the top of a house. Alright, but it's like the top of the house, like a rooftop. Okay, and the clustered closes will show price starting to move sideways. Now he entered on the clustered closes right here, and what is the meaning of this low volume pullback and clustered closes? It means supply on this pullback has diminished, has dried up. Supply is spent, supply is dried up, and it would allow for a demand rally to come back in. So at this moment, the market will, because of these clustered closes, you will see generally two, again, I don't want to use patterns, but you will see general formations over here of either a base or some type of apex, which is like that triangle, whatever they call it. So clustered closes, and it will look like a base or a triangle. Okay, that's how, because of the fact that the closes are clustered on the pullback, it will take these formations where it's apexing or triangle or whatever, and this means the market, when these indications are present on the pullback, it has to be a pullback, has to be a significant number of bars, and it cannot be like a 1 or 2 bar pullback. All right, not a 1 or 2 bar pullback. It has, like you can see over here, there's multiple bars. There's more bars on the pullback than there is on the rally, yet it's not breaking. So you see 1, 2, 3, 4, 5, 6, and the rally only had like the rally had 3 bars, the pullback had around 6 bars. So you have a base or triangle with clustered closes as a result of the clustered closes, and low volume pattern. Do not look at every single bar. It should in general be going down. When this happens, the market, what Wyckoff did was say that it's on the springboard. Okay? Springboard. And that's how you buy pullbacks. Springboard, ready to rally. Springboard in order to ready for the next move up. Now, this is what Wyckoff does, but I put one more indication, and that is from the base, the triangle with the cluster closes and low volume pullback. I want to see a third thing. So you have 1 and you have 2. I want to see a third thing, and that is a progress in the closes bar. Basically, a bar that makes progress in the closes, and it's you could also call it a thrust. Alright, now I want to see this to take the position. This is the trigger. Bang. Alright, now where that bar is actually this bar right here. You see this bar? You see the 3 bars before it, there was clustered closes, meaning there's no more progress in the closes. The closes are not able to make progress. Price is stuck. Price is not making any progress. It's not doing jack. Alright? What happens after that? Bang! You have price making a good close, progress in the close, and this bar shows continuation. So you can call it a continuation bar, you can call it progress in the close bar, call it thrust. Doesn't matter. Alright, that's what I want to see. That's the third thing, but he doesn't mention this, but if you want, you can add this to your arsenal. You'll see this many times. It's even in his study right there. That's the progress in the closes bar. Once this happens, the stop is below the rally low. It's not below here because many times it'll still spring because they want to screw everyone. So remember, stop. I guess I'll cover stops later, but anyway, that's the thrust, the progress in the closes bar. That's continuation bar, whatever you want to call it. That's it. Now, where did Wyckoff take the position? He took it in the clustered closes because that's when the market was in on the springboard and the risk was very low. You could wait for a thrust or a break, and that would slightly increase your risk, but in my opinion, that would be the trigger after the clustered closes and the low volume pullback pattern. In general, it's going to look like a rooftop. All right, now let's take it. So this is how to buy a pullback. Now what I want to do is give a real example of this because whatever. All right, let's go for a real example. So I show all these arrows. All right, so that's your rally. That's your pullback. You see a lot of bars, not like 1 or 2. 1, 2, 3, bang. So it's like an ABC correction here. Very nice. If I'm looking for, I have progress in the close right there. progress in the closes, and that's coming, from a bar that after the pullback, it's even in a spring position, and the blue over here just means that the closes are not making any progress. This is on the SPY daily chart. All right, so it's not. You see this entire thing, like it's going down, 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 down. You see that right here, and then bang, progress in the closes. So in my opinion, that it's on the springboard and ready to rally. This is a second example. This example a little tricky. You have here no progress. The blue means that there's no progress in the close. So it's hinging, it's doing whatever it's doing. Alright? Meaning there's no progress in the close. Now this is funny because they bring it down and then they give the continuation. Alright, so this is a really nice shakeout and then rally. Third example is I think around here somewhere. But I didn't get a mechanical trigger, but whatever. So another example is right here, but I don't like, because I know they're absorbing and then breaking, but I need a pullback. Okay, so this rallies now, then it pulls back, and there's your trigger. So I can live with this, where you have a rally of like 3 bars, a pullback of more, right? And then bang, that's the trigger right there. The continuation trigger. Now it rallies again. And then it pulls back. Now I don't get a clean trigger here, so next rally goes up here. Green, green, green is the rally. Pulls back, nice pullback to test, and you have the blue bars means like it's tightening. There's not a lot of progress in the close. You see the closes are tight together, and then after that, bang, thrust. That's your progress in the closes or continuation bar, and mark goes up. Then what happens is trend changes, and this is interesting because you actually get the trigger, the short trigger here. If you see the red, 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 red as a rally down, then see the pullback, right? Nice little pullback, very nice. Actually an up thrust position off this prior, and then nice progress in the close. And that's it. So again, that is the second place to buy that he talked about. You have a rally, you have a pullback on low volume. General histogram pattern should be on lower volume. Do not look at every single bar, you'll get confused. In general, pattern should be less volume. Clustered closes, and then a continuation based on the progress in the closes. Alright? The market here is on a springboard and launched. The third trigger is on the breakout. Everyone knows that, so I'm not covering it. Alright. The fourth trigger also people know, you have a breakout, pulls back to this area, you buy the test. You can apply similar logic to this because clearly the volume is diminishing, right, on the pullback, and you have a lot of bars, which is good. Alright, now close to close to close to close to close to close to close. So here you would have a lot of progress in the close. If you look at the close to close is not that much. This is significant, right, but it's down. We're looking for it up bar. This is okay. This is tightening. this goes down, and this is a high-end close thrusting, big progress in the close, probably the most right here from close to close. So this is a continuation and your rally. Alright, so I think I've covered the triggers, and that's all, folks.